What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering your favorite stock once again on this YouTube channel, and that is the Sofi stock. We have a lot to talk about with Sofi, and most importantly, the overall market and what I'm seeing with all of these earnings coming out. We have a lot of, small cap earnings coming up, guys. There's a lot of opportunity in the market, and I see a massive rotation coming. There's a lot of good information we're going to be talking about today, and if you find any of this information useful, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks. All right, guys, taking a look at SoFi, we finished the day up 1.5%, after hours down 0.5%. If we take a look at that 5-day chart, we hit a nasty bottom, I believe, around like 1470 or 1460. Stock bounced all the way back up to 1660 early morning today, and then sold off a little bit into the close. So it looks like, there's strong support right around that 14-15 range for sure. Right now, the company is valued around 12x sales because we know that their projected revenue is around 1 billion. This is very good when we're considering other growth stocks, IPOs, SPACs, what all these growth stocks have been valued around. We've seen valuations 30, 40, 50, 60x valuations, just off market cap and sales. So SoFi is one of the cheapest ones, I have personally seen, in my opinion. This is literally on my bottom as far as, cheapest, growth stocks to get into. You're talking about 60% growth, year over year for the next 2 years. That's absolutely astonishing when you're considering a valuation this low. Listen to this real quick. Other companies like Snowflake is valued around 75x sales, Lemonade 54x sales, ChargePoint 45x, Cloudflare 53x, Palantir 35x. So guys, very rich market we're in right now. You have to be searching for the cheapest valuations possible, to protect yourself, okay? There's tons and tons of amazing companies that I want to buy because they're just, amazing companies, but I can't buy them because they're too expensive. I have to pass. Sometimes it sucks because you just want to own a company really bad, but sometimes the valuation just does not make sense. And it could take a year for the company to come back to a reasonable valuation, as the company grows and then the stock sits flat. So amazing valuation right now at 12.5 billion market cap. As we can see right here, the Robinhood IPO has completed. The stock did initially trade in the morning around $38. I believe that was a little bit higher market cap, maybe 34 billion. And then the valuation right now is sitting right at 29 billion market cap. So a huge difference, compared to SoFi, 12 billion compared to a 29 billion, a massive difference. And guys, you have to understand Robinhood, gets a massive part of their revenue through payment for order flow. I just don't see a well diversified, business model like the SoFi stock. Robinhood does have, about 22 million customers and growing fast. Of how easy they make it for young investors to invest in the stock market, but their assets are really low. I believe their member accounts is an average of 4 to 5,000. So there's just not a large diversification in the Robinhood stock. It looks to me like it was an IPO cash out. This is a rich valuation. It looks like a lot of the early investors are going to be cashing out on this stock pretty soon. So just a much larger valuation compared to SoFi. We did talk about this one going IPO route, and the high end would have been 40 billion market cap, which I was saying, was literally 3 times higher than what SoFi was priced around, this past week or two, 12 billion. So I'm happy it didn't go at 40 billion because that would have been a very high valuation. But guys, Robinhood IPO is complete, much richer than the SoFi stock right now. And guys, this is really important. You have to listen to me right now, okay? We have seen over the past 6 months since that inflation headline has broke out, big money whales, big money investors have ran and rushed into these mega caps, Microsoft, Facebook, Amazon, Google, and these stocks have ran up 30, 40, 50, 60%, the past couple of months. And as you're seeing right now, Amazon, they just recently they just missed earnings today as I'm reporting this video. The revenue came in short, and as we're seeing right now, a 6% loss on the day for Amazon. These companies have ran up very, very high, these mega caps. And I'm sure a lot of you guys watching this channel, we're into those high growth stocks. These have sold off 30, 40, 50, 60%. Great companies like, Neo, PaySafe, Open Door, AvePoint, Fubu, DraftKings, these companies have sold off massively. And it looks like, these investors are really going to be watching these earnings reports coming out. And there's another company that just reported earnings. Take a look at this. Pinterest is down 14% in the after hours, guys. Millions and millions of people have left this platform, and their guidance is kind of weak. The same thing with Amazon, weak guidance. Facebook, guys, down 4% as well. The reason why is after earnings, they had a good earnings, but the guidance is very weak. So all of these companies I'm showing you, Amazon, Pinterest, and Facebook, they have gave weak guidance for the future, and all of those companies I just showed you are literally at the top end of their analyst price targets, literally at the tip top. Most of them are even higher than what they're worth. So that's what we're seeing investors, they went the safe route. They picked the safe routes, which was good. But guys, there's so much opportunity in these early stage companies, these growth stocks that have sold off massively right now. SoFi, we only have two analysts covering this stock, but I'm telling you guys, after earnings report in the next 1 to 2 weeks, after earnings come out in the next 2 weeks, I believe that this is going to be up to 5 analysts or more. A lot of coverage is going to be covering this stock because the big money, the inflows are going to come in if this stock has a really, really good earnings, guys. You have 76% upside cushion. And guys, this is not 76% upside on a micro cap, guys. This is a solid company at a 12 billion market cap. This is a very strong company that has a lot of upside. 76% upside, guys, on the price targets. 27.50. We had a low end of 25 and the high end of 30. And in my personal opinion, the next two earnings reports, if they are very, very solid, I believe this company could see a $45 price target I've been talking about. And I'm going to show you exactly what a $45 price target is as far as market valuation. So guys, there's right around 780 million outstanding shares, I believe. I mean, just to make sure, the market cap should come to 13, or the market cap should come to around 12 to 13 if we put in the 1550. Okay, so it's right around 780 million outstanding shares. So guys, I do have a price target of around $45, which is around a 35 billion market capitalization. So this would be putting the company into a 35x valuation, which I believe is very reasonable when you talk about the type of growth this company has. Like I said, there's dozens and dozens and dozens of other companies at 40, 50, 60x valuations. This is one of the companies that deserves one of the highest valuations, in the market. And I'm not even going to that crazy of a valuation at, 40, 50, 60x. I think the high end price target we could see, right around that Superbowl with two more earnings reports could be around $45, especially if they get the bank charter approval in November. But leading into earnings, this stock could surge over $20. So there could be a big move coming in the short term. And guys, this is not the investor presentation. This is the Q1 2021 summary that just happened back in May. And I've gone over this before in one of my other videos. But guys, it's ridiculous how fast this company is growing. The member growth, just take a look. Since Q1 2019, guys, the year-over-year growth for SoFi, 37%, 50%, 54, 59, 74, 90%, 110%. What this tells me is people are loving the platform. They're staying on the platform. The company's marketing tactics are absolutely wonderful. It's drawing in dozens and dozens of customers, and when they get there, they're staying. There's such a wide diversification in products for this stock. It's absolutely insane. But guys, we finished out 110% growth, 2.2 million members. The next slide is the products, accelerating product growth driven by growth in financial service products. Guys, they offer so many different financial services. reached 3.2 million total products and 2.2 million financial service products in Q1 2021. Once again, just look at the growth since 2019, guys. This is literally like 10 quarters almost. The growth is insane. 71%, 85%, 89%, 101%, 113%, 121%. I mean, it has to slow down eventually, guys. Like I said, these early stage growth stocks, they will peak. You're not going to see 121% growth for the next 3 to 4 years, okay? There will eventually be a peak, and we will eventually come back down and slow down to something more reasonable. I'm very excited to see Q2 2020. If there is a blowout, I'm telling you, the big money is going to load up on this stock very fast. Galileo accounts reached 70 million accounts, 130% year over year growth. Guys, this was the big acquisition that, SoFi did. They purchased Galileo for over $1 billion. Tons and tons of competitors use Galileo accounts. We'll look at exactly what Galileo does on the SoFi website, but just look at the growth in accounts. It's ridiculous. All the way back to 2019, 23, 30, 62, 75, 83, 130, 135. This is what I'm talking about right here, guys. That peak, okay? SoFi is just in a massive stage, where the company, its growth is just ridiculous. Once you get to that $1 billion revenue stage, you're going to start peaking. And as you can see right here, we got a little peak in the Galileo accounts. So guys, in total, you're talking over 70 million accounts right now. I mean, the opportunity is endless when you talk about how many products SoFi offers. So guys, SoFi is, around a 10-year old company. I believe they went public for the retail investors at the most perfect time. As you can see right here, adjusted EBITDA has been negative in 2018, 19, and 20. Negative 200 million, negative 100 million, negative 44 million. But as you can see right here, it goes profitable in 2021, 25 million in EBITDA right here. So that just shows you the company and their management. What better time to bring the company public, when their adjusted EBITDA is going in the positive. Right here, they give the Q2 2021 guidance. The low end is about 215 million in revenue, and the high end is about 220 million in revenue. Year over year growth is right in the ballpark of 58 to 61%, and adjusted EBITDA at 1% EBITDA margin. So, guys, if there is a blowout, if something crazy happens, like a 240 or 250, this stock is going to run really hard. But I'm telling you, by what I've been seeing with their, marketing, I've been marketing this stock excessively on my YouTube channel. I believe, the word is picking up on YouTube, and, member accounts are going to be growing very fast. And people, and they just have so many different wide varieties of products. I just believe the revenue is going to continue to grow very fast. And you can see here back in April 7th, 2020, guys, this was over a year ago. I'm telling you, this company was lining it up to go public at a perfect time for you as a retail investor. We're excited to announce that we signed the agreement with Galileo Financial Technologies, the powerful API and payments platform that powers not only SoFi Money products, but numerous other innovative fintech payment offerings all over the world. SoFi has grown to offer a full array of financial products to advance our mission to help our members get their money right. That's why one of the many reasons we're thrilled to add the Galileo team is that it gives us the ability to better serve our members through their best in-class API technology, furthering our goal to provide 24/7 access to critical financial services. Additionally, Galileo's wide penetration underpinning the global fintech space places us in a critical role in reinventing and optimizing how digital finance is done today. Guys, there's so much opportunity in these smaller cap names right now. Anything under, like $40 billion companies, these I believe have the opportunity to run massively. These mega caps have ran for the past 6 months, the entire year. And other companies, and the smaller companies that have had amazing performances in their past earnings, just have not got any credit or credibility, with how the company is performing. You got CNBC bashing, SPAC stocks, saying that all of the companies are, speculation, and that is not true. There was over 500 SPAC stocks, but there is dozens of high quality companies that are, could have easily went the IPO route, and SoFi could have easily done that along with all of the other companies that I talk about on this channel. So once again, this is one of the best valuations I've seen in the market. SoFi is on my lower end, of looking at 40 companies. It's in the bottom 5 of lowest growth stock valuations. Could not be a better time to go public. You're getting a great buy right now. Anything in the 14, 15, 16, 17 range, you got to be buying heavy right now leading up to these earnings. Once again, if you felt this video gave you any better insight on the SoFi stock, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's going to be a lot of great information coming out and you don't want to miss it. And be sure to do your due diligence and research on the investor presentation on SoFi. And you can also check out my other SoFi videos listed on the YouTube channel. Once again, my name is Kyle and I hope you have a great day.